Let's talk about Johnson & Johnson. It is one of the world's largest healthcare companies with divisions focused on pharmaceuticals, which we touched on yesterday, medical devices and consumer healthcare products.
Yeah, so we decided to slip it into this conversation because in addition to its own Johnson & Johnson products and things like Band-Aids and sun creams and all the rest of it, it has taken itself up a couple of notches in the global hair care market by buying a company called Vogue International, which was for about $3.5 billion. There was a big competitive. It's one of the number 4 in the US market with salon products like OGX and FX. So we thought, well, you know, it's getting a bit bigger in that space, so let's put it in this
market cap. We're looking at $326.9 billion, price to earnings ratio of 22 and a dividend yield of 2.7%. Talk about heavyweight. Let's have a look at that share price graph.
It has done really nicely. It was a bit quiet for 2013 and 2014 and 2015, and people were getting grumpy. It was hovering at $100 a share. But in the course of 2016, it's had a really nice lift off. Some of that comes from the pharma division. And I think also just some of it comes from the sense that as a global conglomerate, it still looks good and it still has the ability to lift earnings.
Yeah, I mean, at the moment, you've actually got the prospect of a possibly near-term weakness in the US dollar, really supporting that stock. I know dollar strength has been very negative for these big multinational conglomerates. You also have this pharma division performing very well with a new product pipeline, really offsetting any sort of patent expirations over the next couple of years. And then you also have these guys just getting involved a little bit more in the consumer space. Just talking about this near-term dollar weakness, if we do see a rate hike back on the cards, as seems to be the case, we're going to see dollar strength coming to the fore. Absolutely, and that in turn will be negative for this company. And you'll see if we start talking about L'Oreal and Procter & Gamble, it's kind of a trend everywhere. What's the dollar going to do? What's the euro going to do? And that is going to have a big impact on earnings expectations. But you don't make your investment decisions on currency forecasts, do you?
Because to be honest, the dollar's been quite strong historically. I don't think it can get that much stronger because it's also been baked into the cake, their rates of growth relative to the others.
You've also been in Johnson & Johnson for a long time, Paul. This is one of the stalwarts of your portfolio.
You know, it's very easy to buy them because it just gives you a single entry point into all of those things that we like. So we like pharma and all of the high value, high margin treatments for cancer and for, you know, attention deficit order. They own things like Concerta and so on. Plus then medical devices. With Johnson & Johnson you get a business which they bought called Synthos, which does all of those hips and knees and joint replacements, scanners, that kind of thing. So it's really a single one-stop shop in order to get into all of this kind of consumer stuff.
Chantal, looking at their recent performance, do you think it is worth getting into the stock? Because we have had a rally. Yes, even though this rally has been pretty strong, these guys did upgrade their guidance for both earnings and sales after they released second quarter results. Second quarter results beat analyst expectations, and the valuation really doesn't look too bad. Plus, in a low yield world, a forward dividend yield of around about 3% is very attractive. Are you steeped in this one? Oh, yes. And you have been for a long time? Yes. I think our global leaders portfolio has been invested in the stock ever since its inception, probably in the early 2010s. So this is still a long-term play. For the horizon for holding Johnson & Johnson.
And I like the fact that it has stuck to its guns. It hasn't bowed to pressure from some of the sell-side analysts who say it should be split up. You know, there's always that kind of chirping from the peanut gallery. Is this one of the stocks that you put in your bottom drawer and kind of look at again in 10 years' time? Yeah, I think so. And I think it really will reflect well on you long term because the spending by humans on these kinds of things, pharmaceuticals, medical devices and consumer healthcare and hair care and other personal products will exceed, I think, what most analysts suggest. So besides humans, there are other elements out there that are purchasing personal care? I'm thinking maybe the dogs. We'll talk about it. I think the humans purchase those for the dogs, so it still comes back to the humans. Man, the humans are in good condition. Hot or not, Chantal? It will have to be a hot on this stock, a long-term hot. Paul, hot or not? Yeah, hot for me, for sure.